There is something most traders don't talk about enough. Everyone talks about finding the right strategy. Everyone talks about entries. Everyone talks about analysis, indicators, market structure, and setups. But very few people talk about what happens after you already know what to do. Because knowing what to do and having the emotional strength to execute it are two completely different things. And this is where many traders lose the battle. Not because they don't understand the market. Not because they don't have a profitable strategy. But because fear changes the way they react to every outcome. A winning trade. A losing trade. A missed opportunity. Even a period of success. Fear has a way of influencing every single part of your trading journey. And that's exactly what we're going to discuss today. Welcome back, traders. This is part 2 of our discussion about the silent enemy that holds many traders back, fear. In the first part of this series, we exposed how fear affects traders before they even enter a trade. We talked about hesitation. We talked about overthinking. We talked about how fear disguises itself as patience and discipline, causing traders to miss opportunities they were fully prepared for. If you haven't watched part 1 yet, I highly recommend going back and watching it first because it builds the foundation for everything we're discussing today. But if you're joining us for the first time, don't worry. By the end of this video, you'll understand another side of fear that affects even experienced traders. Because fear doesn't disappear once you enter the market. In many cases, that's when the real battle begins. The fear that appears after you take a loss. Let's start with something every trader experiences. A losing trade. No matter how skilled you become, no matter how much experience you gain, no matter how refined your strategy is, losses will always be part of the journey. But here's the difference between traders who grow and traders who remain stuck. It's not whether they lose. It's how they interpret the loss. Because fear has a very dangerous habit. It takes one event and turns it into a permanent belief. Think about this. You take 10 trades. You execute your strategy correctly. You follow your rules. You manage your emotions. 9 trades go well. 1 trade loses. What does your mind focus on? The 9 successful executions? Usually not. Your brain immediately goes to the loss. Why did that happen? Maybe my strategy doesn't work anymore. Maybe I missed something. Maybe I should change my approach. One losing trade suddenly becomes louder than all the evidence you collected before it. And this is where many traders make a critical mistake. They confuse a normal outcome with a broken system. But professional traders understand something important. A strategy is not judged by one trade. A strategy is judged by a large sample size. A single loss is not proof that you failed. It is simply one result inside a much bigger process. Imagine a basketball player. A professional player can miss a shot. Does that mean they forgot how to play? Does that mean their entire training is useless? Of course not. They understand that missing shots is part of competing. Trading works the same way. A losing trade does not automatically mean your analysis was wrong. It does not automatically mean your strategy stopped working. Sometimes you can make the perfect decision and still get an unfavorable outcome. That is the reality of dealing with probabilities. But fear doesn't think in probabilities. Fear thinks in emergencies. Fear sees one loss and says, something is wrong. Fear sees one bad result and says, change everything. And if you listen to that voice long enough, you create one of the most destructive cycles in trading. The cycle of constantly restarting. The negative memory loop. This is something many traders experience, but rarely recognize. Let's say you lose a trade. The loss bothers you. You remember how it felt. The frustration. The disappointment. The money leaving your account. The feeling of being wrong. Your brain stores that emotional experience. Then a few days later, another setup appears. The same type of setup, the same strategy, the same conditions. But now something has changed. The market hasn't changed. Your strategy hasn't changed. You have. Your previous loss has entered the decision-making process. Instead of seeing the current opportunity, you see the previous pain. Your mind says, remember what happened last time? What if this one loses too? And suddenly you're no longer analyzing the current trade. You're reacting to an old experience. This is how fear controls traders. It makes the past influence the present. But every trade is a new event. The market does not remember your previous loss. The next setup does not know you lost yesterday. The chart does not care about your emotions. Only you carry that memory forward. And if you allow every previous loss to control your next decision, you will never truly trade your strategy. You will always be trading your emotions. Learning from losses versus being controlled by losses. Now, this does not mean you should ignore losses. Losses contain valuable information. A professional trader reviews losses. They study mistakes. They identify weaknesses. They improve their process. But there is a major difference between learning from a loss and being controlled by a loss. Learning sounds like this. What can I improve? What did this trade teach me? Was my execution correct? Being controlled sounds like this. I can't trust my strategy anymore. I should stop trading. I need a completely new system. One mindset creates growth. The other creates fear. The goal is not to become a trader who never feels disappointed. The goal is to become a trader who doesn't allow disappointment to make decisions for them. Because emotions are temporary. But decisions made from emotions can create long-term damage. The fear of winning. The problem nobody expects. Most traders understand the fear of losing. They understand the anxiety before entering a trade. They understand the frustration of watching a position go against them. But there is another type of fear that surprises many traders. And ironically, it appears when things are going well. The fear of winning. At first, this sounds strange. Why would anyone be afraid of making money? After all, isn't profitability the goal? Isn't that the reason you started trading in the first place? But if you spend enough time in the markets, you will notice something interesting. Some traders are not only afraid of losing, they are also uncomfortable when they start winning. Because success creates a new type of pressure. A losing trader thinks, what if I lose money? A winning trader sometimes starts thinking, what if I get it all back? And that single thought can completely change their behavior. Imagine this situation. You enter a trade. Your analysis is correct. Price begins moving in your favor. The position is now profitable. Maybe you're up 20 pips. Maybe 50 pips. Maybe even more. Everything is going according to plan. This is the moment where your strategy should be working. This is the moment where you should simply allow your trade to play out. But instead of feeling confident, you start feeling uncomfortable. You begin staring at every candle. Every small pullback feels dangerous. Every small retracement feels like the market is about to take everything away. Your mind starts creating scenarios. Maybe I should just close now. At least I can secure something. What if this turns around? And eventually, you exit. Not because your strategy told you to. Not because your target was reached. Not because the market structure changed. You exit because you wanted relief from the emotional pressure. Then something painful happens. The market continues exactly as you originally expected. Your target gets hit. Your analysis was right. Your strategy worked. But you were no longer part of the move. This is one of the most frustrating experiences in trading. Because losing a trade hurts. But watching a trade you were correct about continue without you can hurt even more. And this is where traders need to understand something. A profitable trade is not just a test of your analysis. It is a test of your emotional control. Anyone can enter when they feel hopeful. But can you remain disciplined when uncertainty appears? Can you trust your process while money is moving? Can you allow your edge to work without interfering? That is where professional traders separate themselves. Why some profitable traders still stay poor. Now let's talk about a problem that many people don't expect. A trader can actually become profitable and still fail to create meaningful financial results. How is that possible? Because profitability and growth are not always the same thing. A trader might have a winning strategy. They might execute correctly. They might even maintain consistency. But fear can still limit their progress. How? Through hesitation around growth. They become comfortable with where they are. They protect their current levels so aggressively that they never allow themselves to advance. For example, a trader proves they can make consistent returns on a small account. They have months of evidence. They have developed discipline. They understand their strategy. But when it's time to increase their size, fear appears. What if I lose more money? What if I can't handle larger positions? What if my previous success was just luck? So they stay exactly where they are. Month after month, year after year, they remain profitable, but their results never match their ability. Now, this does not mean a trader should suddenly become reckless. It does not mean increasing risk without preparation. It does not mean forcing growth before you're ready. That is not confidence. That is ego. The goal is not to remove all caution. The goal is to grow at a level where your mindset can handle your progress. Because eventually, every trader has to face this reality. You cannot build a bigger trading career while thinking like someone who is afraid of everything. Your skills have to grow. Your discipline has to grow. But your ability to handle success must grow too. Otherwise, fear will always bring you back to the same level. The comfort zone that keeps traders stuck. One of the biggest traps in trading is becoming comfortable with being uncomfortable. You experience failure. You experience setbacks. You experience disappointment. Eventually, your brain starts accepting that level as normal. You become used to struggling. You become used to restarting. You become used to saying, I'm almost there. Next month will be different. I just need one more improvement. And because that struggle feels familiar, you unknowingly protect it. This sounds strange, but people often stay inside situations they complain about because those situations feel predictable. Growth requires stepping into uncertainty. And uncertainty is exactly where fear becomes loudest. Think about a trader moving from demo to live trading. On demo, everything feels easy. The numbers are there. The strategy works. The emotions are controlled. Then real money enters. Suddenly the same strategy feels completely different. Why? Because the environment changed. The trader is no longer just analyzing charts. They are confronting themselves. They are facing their beliefs about money, their confidence, their ability to handle pressure. This is why some traders spend years on demo accounts. They are not always learning. Sometimes they are hiding. Demo feels safe because mistakes have no emotional cost. But growth happens when you learn how to execute correctly despite discomfort. The fear cycle that keeps traders trapped. Now let's connect everything together. Because fear doesn't usually destroy traders through one big mistake. It destroys them through a repeated cycle. A cycle that happens again and again. It starts with fear. Fear creates hesitation. Hesitation causes missed opportunities. Missed opportunities create frustration. Frustration creates impatience. Impatience leads to forcing trades. Forced trades create losses. Losses create more fear. And the cycle repeats. This is why many traders feel like they are constantly fighting themselves. They are not simply dealing with losing trades. They are dealing with a pattern. A pattern where one emotional reaction creates the next mistake. The trader thinks, why do I keep making the same mistakes? Because the mistake is not the real problem. The emotional trigger behind the mistake is, if you only fix the behavior without understanding the cause, the problem keeps returning. You might stop revenge trading for a week. You might avoid overtrading for a month. But until you understand why those behaviors appear, fear will simply find another way to express itself. How professional traders think differently. So what separates professional traders from everyone else? Is it that they don't feel fear? No. That is one of the biggest myths in trading. Professional traders experience fear. They feel uncertainty. They feel pressure. They experience losing streaks. The difference is not the absence of emotion. The difference is control. They understand that emotions are information, not instructions. Fear can tell you, this matters to you, but it does not get to decide your actions. A professional trader can feel nervous and still execute. They can experience doubt and still follow their plan. They can accept a loss without questioning their entire identity. Because their confidence does not come from being right every time. Their confidence comes from knowing they can handle whatever happens. That is true trading confidence. Not predicting the future. Not having a perfect win rate. Not avoiding losses. Confidence is trusting yourself enough to follow your process. You don't defeat fear by waiting for it to disappear. Now, this is where many traders misunderstand the process. They believe that one day they will wake up and suddenly feel completely confident. They think there will be a moment where fear disappears forever. A moment where they no longer feel nervous before entering. A moment where every trade feels easy. But that moment never comes. Because fear is not something you completely remove from trading. Fear is something you learn to manage. Think about any professional athlete. Before a major competition, they still feel pressure. Before stepping onto the field, they still feel nervous. Before an important performance, they still experience uncertainty. But they don't wait until the nervousness disappears before they perform. They perform despite it. Trading works the same way. The goal is not to become a person who feels nothing. The goal is to become a person who no longer allows feelings to control actions. A trader who understands this stops asking, how do I stop being afraid? And starts asking, How do I make the right decision, even when fear appears? That is the mindset shift. Because successful trading is not built on perfect emotions. It is built on consistent execution. Accept the reality of uncertainty. The first step toward controlling fear is accepting something most traders fight against. You will never know exactly what happens next. No strategy can remove uncertainty. No indicator can remove uncertainty. No amount of analysis can remove uncertainty. Even the best traders in the world are making decisions inside an environment where the outcome is unknown. And that is not a weakness of trading. That is the nature of trading. The mistake many traders make is trying to achieve something impossible. They want a setup where losing is impossible. They want confirmation so strong that failure cannot happen. They want certainty before they risk anything. But if certainty was possible, trading would not exist the way it does. The opportunity exists because the future is unknown. The reason profits are available is because risk exists. Every reward in the market is connected to uncertainty. So instead of fighting uncertainty, professional traders learn to operate within it. They stop asking, will this trade win? And they start asking, does this trade follow my rules? That question changes everything. Because the first question focuses on something you cannot control. The second focuses on something you can. Stop measuring yourself by individual trades. One of the biggest sources of fear is attaching too much meaning to one outcome. A winning trade makes you feel like a genius. A losing trade makes you question whether you belong. This emotional attachment creates instability. Your confidence goes up and down with every candle. One day you're convinced you finally understand the market. The next day you're searching for a completely new strategy. But professional traders don't evaluate themselves based on one trade. They evaluate themselves based on their process. A good trade can lose. A bad trade can win. That is something every trader must understand. Imagine you take a trade exactly according to your strategy. Your entry was correct. Your risk was controlled. Your analysis was logical. But the market unexpectedly reverses and hits your stop loss. Was that a bad trade? No. It was a good decision with an unfavorable outcome. Now imagine the opposite. You enter a trade without proper analysis. You ignore your rules. You take unnecessary risk. But somehow, the trade makes money. Was that a good trade? No. It was a bad decision with a favorable outcome. This distinction is what separates professionals from gamblers. Professionals judge the quality of their decisions. Amateurs judge themselves only by the result. Build evidence instead of searching for confidence. Many traders think confidence comes first. They believe, once I become confident, then I'll execute better. But it usually works the opposite way. Confidence is created through evidence. You build confidence by proving to yourself that you can follow your process. Every time you wait for your setup. Every time you follow your rules. Every time you accept a loss without revenge trading. Every time you avoid making emotional decisions. You create evidence. And that evidence slowly changes your belief system. You start thinking, I can trust myself, not because every trade works, but because you have proven that you can handle every outcome. Confidence is not built by winning all the time. It is built by keeping promises you make to yourself. Your strategy needs your trust. A strategy is useless if you don't trust it. You can have the best system in the world. You can have perfect entries. You can have a detailed trading plan. But if you abandon it every time emotions appear, the strategy never gets a chance to work. Think about planting a tree. You put the seed in the ground. You water it for a few days. Nothing happens. So you dig it up and replace it with another seed. Then another. Then another. Eventually, you never allow anything enough time to grow. Many traders do the same thing. They change strategies before giving their current approach enough opportunity. They don't fail because their strategy was bad. They fail because they never developed the patience to execute it consistently. Trust is built through repetition. You don't trust a strategy because someone online says it works. You trust it because you have tested it. You understand its strengths. You understand its weaknesses. You know what conditions it performs best in. And you have enough experience to stay disciplined when emotions appear. The trader you need to become. At some point, every trader reaches a crossroads. You either continue being controlled by fear, or you decide to become responsible for your own decisions. Because the market will always give you reasons to be afraid. There will always be losing streaks. There will always be unexpected moves. There will always be moments where you question yourself. You cannot control that, but you can control your response. The goal is not to become fearless. The goal is to become stronger than your fear. A mature trader understands. Losses are not personal. Mistakes are not identity. Uncertainty is not danger. And one bad day does not define the future. The market rewards the traders who can remain consistent, while others become emotional. Because trading success is not only about finding opportunities. It is about having the mental strength to execute when those opportunities appear. So if you have been struggling with fear in trading, remember this. Fear is not proof that you're not ready. Fear is proof that what you are doing matters to you. But you cannot allow fear to become the person making decisions for you. Your job as a trader is not to predict every move. Your job is not to win every trade. Your job is to execute your edge, manage your emotions, and stay committed to your process. Because the traders who succeed long-term are not the ones who never feel fear. They are the ones who learn how to move forward, even when fear is present. They understand that every trade is simply one decision in a much bigger journey. So the next time you feel hesitation, the next time you feel doubt, the next time your emotions try to take control, ask yourself, am I making this decision because it follows my plan? Or am I making this decision because I'm afraid? That one question can change the way you trade forever. Because once you stop allowing fear to control your decisions, you don't just become a better trader. You become a more disciplined version of yourself. Thank you for watching. If you haven't watched part 1 of the series yet, make sure you go back and watch it because it explains how fear affects your decisions before you even enter a trade. And if this video helped you understand your own trading psychology better, consider subscribing for more content about discipline, consistency, and the mindset required to become a better trader. Keep learning, keep improving, and remember, the biggest battle in trading has never been against the market. It has always been mastering yourself.